my time, you are I want. Neither of us wanna be alone.
Okay, g'day, Rudy here. A cracker of a question, because it's one of the reasons I started this channel in February, when I called all these FANGs, VAS, VGSs a sell because they were just run too far. But this one's in particular a FANG, and you probably say I'm full of shit, but that's what I'm here for, to talk against the narrative, which is a big reason, because you put FANG into Google, and this is the type of stuff you get. The ETF that gave 100% returns in 1 year. How this ETF gave 88% return into, that. So that's what FANG's being sold on. Now, if you bought FANG here in November 24, well, guess what? You ain't got 100% returns. Not everything goes up and doesn't stop. Everything goes up and corrects. And then if it's a good story, it'll keep going up. But nothing in the world keeps going up. So bear with me, because I do think it's important, because I hate seeing all these people in YouTube ads, and then at the end of them they try and sell you a brokerage account which they get commissions from. But yeah, so let's talk about this what I call complacency risk, which is, FANGs are safe. It's the best long-term investment. That's what you hear. But there's things that sit behind the background, things like regulation, Alphabet's antitrust case, Meta's privacy fines, competition, TikTok for Meta, Disney for Netflix, macro headwinds, example, China slowing down, impacting ad revenue. They're real world things. And then the big one, which is a whole new video in itself, while I believe in charts and don't really believe in PEs and balance sheets and rah-rah, but the financial world some analyst has to put a number on what a stock's worth. And the key component that they use is a discounted cash flow. And there's two key metrics in there. One is interest rates. So if interest rates are going down, I'm not going to go into it deeply, but essentially if interest rates are going down, the value goes up. Then obviously if revenue growth rates are going up, then the value goes up. But what happens when interest rates stop? The expectation, like in America, the expectation was being for lower interest rates over the last year. That's what's driven a lot of this. What out if Trump comes in and there's high inflation and they don't raise interest rates? These tech stocks very heavily influenced by that. Revenue growth rates. These FANG stocks are being valued on high levels of revenue growth, 20-30% plus. So what happens if they come out one quarter and said, we only grew 15%? You watch it get hammered. So that's a whole new, but that's a short summary. And and also for the other question the lady asked, so references, this FANG group is 20% of NASDAQ. Okay, so there's the bad news that you won't hear from any TikToker or YouTuber. So if I go and look at the charts, we've had this beautiful long-term uptrend, formed a beautiful short-term uptrend. So you'd say that looks beautiful, but it is. But it's coming to a testing time. And another, I bring out my friend, the Fib. So if we look at the move from here to here, get him out of the way. So the move from here to here, So there's the 200% retrace. So it's gone and hit the 2.618 fib retrace. So it's always a good effort if you can get to 2. It's an even better effort if you can get to 2.6, and there's another one after that. But it looks like it's, like you can see here when it got to the 2, it sort of didn't go on with it, but then it had another go and it did. And now it's coming down to test the 2. So I'll just get rid of that for now. So that's what I say, we're at a key point here. So if we come down to a weekly level, because this lady wants to know if it's good for a long-term investment. And I don't know, I think it was the lady who asked me a couple of weeks ago, but I think it was around here, and I said, okay, what you need to wait for is one of these candles, a big green one. So we're nearly at the end of the week. It's Friday here, but not Friday night. So America hasn't opened Friday night. But I'd say we're going to finish the week with a red candle. So I wouldn't be touching this thing. And I wouldn't be touching it for a while because for all those other reasons, it gets sorted out. I think there's more risk to the downside than upside. So I would want to see it come down to here, which I think it will, and then see what happens. If you get a couple of weeks of big green candles, then yeah, you jump in. It looks like the party yet isn't over. But if you get a red candle, big red candle below here, and we're also at this $30 mark. For some reason, the markets love round numbers. So if we can't convincingly kick 30 in the head, then it's going to come back down. And so I wouldn't be buying it for the long term. Whoops, there's other history. So no, I wouldn't be buying in the short term. I'd at least be waiting a few weeks. But I reckon if we bring out our fib, so retracement from that high, so 50% retracement will bring us to 27. A decent retracement will get us to 25. So then jump in then. So just get rid of him. So a decent correction down to here, which would actually be, you can see this little blue line. So 24. Okay, then back up the truck, assuming things like this are under control. Alright, so that's FANG. A bit long-winded, but I'm not trying to sell you something with a brokerage account at the end and a guaranteed return of 90%. It annoys me when I see those ads. That's why I started this channel. Alright, so I'm just trying to look on the right side, which you can't see for NASDAQ. Where's NASDAQ? Okay. NDQ. Here's my little... okay. So, didn't want... okay, so what I was talking about, the discounted cash flow. So a 1% increase in the discount rate can slash growth stocks valuation by 10 to 20%. So, interest rates have fall at the moment, sort of that's and expected to drop. So there's a bit of fire under there. But if inflation starts hitting America, and they don't actually even cut this year, then just that fact will kick tech stocks hard. Anyway, so that actually let us know if people want to know about discounted cash flow and valuation. It is interesting. It used to be what I used to do. So NASDAQ looks like the FANG, obviously, because it's 20% of it. So this is the NDQ. So this is the ETF NDQ. So it's really a ditto. Been in a long-term uptrend. You can see even here, so it broke it, came back down and set the bottom of this longer term one. broken the uptrend line, coming down to test again. So again, we're just, if you're in for the long term, you don't want to buy now and then let's see it come down here and then spend another 12 months to see it come back up. Because look, this is, so January 22, and then you got back to the price May 23. So for 1.5 years, if you bought here, the famous NDQ, well, you actually lost. Actually, let's just see what you did lose. So if you bought there, you would have lost 26%. So someone would have, and then took them 8 months to get back. So the bullish trend's still there, but I'd rather not be buying now and just wait a month or two, wait for things to settle, rather than potentially have this happen to you. Alright, sorry that's a bit of a long one, but I think it's important, given where we are with this lack of, or this sort of long-term passive investment thinking around the FANG and the VAS and the VGS and the IVV. I just did a video actually the other day on IVV. I think it's in the same sort of boat as this. Alright, so yeah.
Never waste my time. You are